Hi everyone, welcome to the 1515. My name's Chris Capel and I'm the global head of the regulatory team here at Maples. The podcast today is going to be a quick one, a whistle-stop tour of 15 minutes covering all the latest regulatory developments, not only up to September, but also July and August because we missed those. Delighted to say joining me today, as always, have my fellow partner, Patrick Head. Hey, Pat.
Hey, Chris, you good?
I'm good. And also we have our exceptional PSL, Jen Parsons. Jen, you all good?
All good. Thanks, Chris.
Okay, perfect. All right, I mentioned at the intro, we have quite a lot to get through. So today we're really going to have to stick to the 15 minutes. Pat and Jen, if I cut you off or nudge you on, don't be offended. But should we just get stuck into it? So Jen, initially, are you able to track us through some updates? I think there's been quite a bit going on with the DITC and some other stuff with CIMA. So if you can crack on with those, that would be perfect.
Will do. Thanks very much, Chris. So let's start with the DITC, and we've got an updates bulletin that came out in late June. And in the bulletin was a general reminder of upcoming filing deadlines in relation to FATCA and CRS. As well, there was a confirmation that the DITC portal was open for 2024 CRS FATCA submissions. Finally, the important point to note is that was mentioned within the bulletin is for reportable jurisdiction persons, there's an obligation on financial institutions to collect the tax information number or TIN of account holders or controlling persons. If the TIN is available now, it must be reported now. Where it's not, that needs to be obtained or collected by the end of the second calendar year following the year in which the accounts were identified as reportable accounts. Next thing to move on to as well, at the end of August, we had the DITC announcing that country-by-country reporting, CBCR, is now live on the DITC portal. So we've got a requirement now for multinational enterprise groups or MNE groups with Cayman Islands constituent entities to re-register on the new portal by the 30th of November of this year. The DITC expects to activate CBCR reporting functionality on the portal in November as well. And just to note that the DITC has updated its CBCR guidelines. Those have been released and are available on the DITC's website. They've also published an updated DITC portal user guide, and that really is just aimed at trying to incorporate updated guidance around CBCR. The other thing to note is we're recording today on the 15th of September, and today is the deadline for the CRS compliance form. This is the form that collects data on each financial institution's non-reportable accounts. So that's going to include things like the nature of business, whether the financial institution is regulated by CIMA or not, whether it's prepared audited financial statements, and whether it's in compliance with applicable AML regulations. It would also be disclosure around whether the FI is using any service providers to help with its CRS compliance. So again, just a reminder that that is due the 15th of September. We should also mention that we are aware of an uptick recently in terms of the DITC's issue of penalty notices for non-compliance in relation to economic substance and also in relation to breaches of CRS regulations. So once again, as always, it's imperative that entities ensure their classifications under each of these regimes have been performed or correct, and where any filings are required, that they are submitted on a timely basis because the fines involved here are not insubstantial. So Maples, as always, is pleased to assist any of our listeners with ongoing economic substance and or CRS compliance, as well as giving advice in relation to any possible breaches and or penalty notices that have been received.
Just going to interrupt on the economic substance point and also CRS, just for clients to ensure that the person that they've designated as the responsible person to receive the communications from the DITC is in fact still the right person and that he or she is still monitoring their inbox. We are seeing quite a number of examples where the person has left or they're just not picking up the emails. So, despite everyone's best efforts for compliance, sometimes that does get missed. But quite rightly, as you said, we're seeing quite a bit of activity on that at the moment. Sorry, Jen, carry on.
Oh, thanks very much. That's an excellent point, Chris. So I'm going to just move on now with a few CIMA updates. The main thing to point out here is, and this was some good news, that we've got something now called a director's amnesty scheme. And that's basically CIMA has launched a one-time non-compliant director's amnesty scheme, which is open to registered directors within the 1 to 19 covered categories. Covered entities category, rather. So anyone who fits that category who, as of the 31st of August of this year, has more than 2 years of unpaid annual fees would be able to take advantage of this scheme. The idea here is that these eligible directors can voluntarily settle outstanding annual fees and accrued penalties at a discounted rate. The scheme's going to run from the 16th of September to the 15th of October. But once it closes, full fees and penalties will apply without exception. So important to get on this right away. Now, if there's any director that is already subject to some sort of enforcement action or under investigation, they would not be eligible to participate in this particular scheme. Applications under the scheme will be made through the Directors Gateway portal, and the portal link is available in our show notes if anyone wants to consult that. And then more of a housekeeping, I guess, point to mention, CIMA has moved. The new physical address, again, is going to be available in the show notes, but effective the 30th of June, they are at their new location. All of their telephone numbers and email addresses remain unchanged, though. So it's just where someone is actually looking to attend at the offices there or to send something to the physical address that they would be impacted. And then I think the final thing to mention is, and this is, I suppose, an ongoing thing in a way, but it's just another notice has come out with respect to CIMA being aware of an ongoing phishing scam. And we just want to, caution everyone, as CIMA has done, that legitimate CIMA emails will come from the domain extension @cima.ky. If you're seeing something that's coming from a different extension or from something that looks like a strange address, of course, be cautious around that. CIMA encourages the public to report any of these suspicious emails if they do see them. And those would be reported to abuse@cima.ky. So that's it for the CIMA update.
Perfect. Thanks, Jen. I'll just dive in on a couple of points, Pat, and then you can maybe close us out. Importantly, on the 12th of August, the Cayman Islands government did establish the Office for Strategic Action on Illicit Finance, which we refer to as OSAFE. So they're going to be a centralized body that's purely established to assist with the Financial Action Task Force and general international standards that we have. So they will be sitting within the Ministry of Financial Services and Commerce, and the primary role is just to coordinate our leadership delivery on AML, CF, and PF. I've got a couple of comments here from the Honourable Premier Andre E. Banks. So the establishment of OSEF reflects our unwavering commitment to effectiveness, not just technical compliance. And we must demonstrate that the Cayman Islands can swiftly and cohesively respond to the evolving threats of illicit financing whilst meeting the FATF's expectations for tangible outcomes. So important new government body established a real sort of important focus for us as a jurisdiction. And then related to the creation of OSEF, 7 days later on 21 of August, the Cayman Islands did start its National Risk Assessment. So the National Risk Assessment for 2025 and 2026 is very much underway, and the focus of every National Risk Assessment is to better identify, better assess, and better understand the jurisdiction's risks of financial crime. The National Risk Assessment is a key part of our upcoming CFATF mutual evaluation, which will take place in December of 2027. So, Pat, I think we have a few things to talk about. I know that you were working over the weekend on a few consultations. There's a bit of VASP stuff going on. So do you just want to let us know what the latest is on those?
Yeah, thanks. I was saying it's been a fairly busy couple of weeks. So coming back from the summer break, everybody sort of landed with 3 material consultations on their desks at the moment. Initially on the VASP regime, there was an amendment to the VASP Act, which was published back in June, which was just to address the tokenization of funds and to sort of provide clarity to the existing position that tokenizing the equity interest in an investment fund was not subject to the VASP regime. So that was a welcomed clarification, although that particular amendment is still yet to be turned on, if you will, which will occur once CIMA confirms as such. But related to that, there's then been a move to just make consequential sort of clarification edits to the Mutual Funds Act and the Private Funds Act as well, just to dovetail with those amendments again, to make it clear that when you are looking to tokenize an equity interest, so whether that is the share, the unit trust interest, or a partnership interest in a regulated investment fund, that would fall out of scope, with blockchain technologies essentially being used for record keeping and transactional purposes. Obviously, all of the other bells and whistles that go with issuing of a security interest remain in place. Beyond those particular changes for the VASP regime, there was also new regulatory measures which were issued on the 10th of September. And again, these sort of provide for some key updates just around existing VASPs, put in place some new requirements, including notification obligations to CIMA within 15 days of any sort of material changes to the VASP, and clarifications around AML compliance officer and stakeholder requirements, etc. Details onto the audit reports as well. So those are sort of more key for those clients who are interested in actually establishing a regulated VASP regime. Beyond the tokenized points and the VASP points as well, there've been movement with respect to the common reporting standard. And in addition, a new framework, which is sort of largely based on the common reporting standard, or CRS, which is in relation to crypto assets, which will be the crypto asset reporting framework. Now, the two CRS and the CARF, which to be fair has actually been worked on for 2 or 3 years now, are both OECD driven initiatives. And so the Cayman Islands is obviously looking at having to implement these changes, one, to make certain adjustments around the scope of what's being currently reported under the CRS, and then with respect to the crypto asset reporting framework, putting in place an entire new regime to capture the reporting of transactions. And this will be both for entities and also for natural persons can be caught in scope here as well, as sort of being a reportable or a reporting person under this framework. Now, each of these consultations, as you mentioned, is sort of due for tabling. Industry's been today. That is, industry has been very busy over the last couple of weeks and right through the weekend, as you noted, just to make comments and to collate through all of the various industry bodies, comments back on each of those three regimes. So I think what will be interesting in the next week or two is just to see where we land on that, which particular measures will actually filter through, where there will be some adjustments. And then it will be quite interesting, I think, to do a bit of a deep dive into these frameworks, particularly just on, say, the tokenized fund aspect, but also then there'll be a lot of detail to work through for the adjustments to the common reporting standard, and also quite how the crypto asset reporting framework will work in practice. So there'll be more to come on each of those, I think, Chris.
Yeah, sounds like another few podcasts in the making there. Was there anything else on your side, Pat?
No, I think that's the lot. From my side today, I just echo the comments that you've been seeing. It's been a very busy start, really, towards the end of the year. I think post-summer, a lot going on.
Yeah. Okay. Perfect. One other reminder, I guess, for everyone is just around AML training. We are seeing a lot of interest in that now as we close the end of the calendar year. Just a reminder that there is an annual training requirement. If you do need that, drop us a line. We have our online platform that a lot of clients are finding quite useful. To the extent you want more bespoke, in-person, virtual training, just drop myself, Pat, or Jen a line, and we're happy to assist. So that's it for us. As Pat mentioned, we will have more detailed podcasts later once the CRS, CARF, and virtual asset stuff gets more settled. Until then, thank you for listening, and thanks, of course, Jen, and thanks, Pat.